Good morning. It is July the 19th, 2017. Time to kick off another trading day with our customary disclaimer. Hypothetical assimilated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit and losses similar to those shown. Taking a look at the bond, very little news out overnight. The news focus has shifted to tomorrow's ECB and Bank of Japan announcements. The Bank of Japan is expected to lower their inflation forecast. The ECB is supposed to allude to or point to tightening by the end of the year, and we'll see if that actually happens. The announcements by either the Bank of Japan or the European Central Bank can move the markets, especially currencies, in a big way. But currency would be the first impact. The second one would be the debt markets, and in the equity markets, usually takes a while for it to whatever they've said or done to move into the equity markets. So they're the least affected by those announcements. But currencies and treasuries are usually immediately affected if there's any big changes. We're in a trading range right now. Probably the cleanest break in the markets down here at 125.08. Resistance starts big time at 126.04. It's about 3/4 of a point away. Today's news starts plus 1.17, and they'll pay more attention to starts than permits because it's actual dollars being spent, houses coming out of the ground. Permits plus 1.20. Then crude is forecast at minus 3.6. The APIs last night showed a build of plus 1.62. But a big draw in gasoline, minus 5.45. And a big draw in distillates, minus 2.89. So we have the potential for a whipsaw in today's inventory numbers from the EIA. We'll see how the market is playing. They'll probably be playing for a draw less than 3.6, and they'll be expecting draws in gasoline and distillates, and then gasoline will be the major focus because it's driver season. So first sell is 3 to 7. Second sell is 11 to 15. First buy is 25 to 29. Second buy is 17 to 21. And my guess is resistance at 126.04 holds. Looking at the 30-year. Got pretty good support down here at 153.12, and that's C period low. Got the B period low, so 12 to 16 is going to be the first little support band. Got a low at 20, so we'll make 16 to 20 number 1, 9 to 13 by 1, 1 to 5 by 2. Number 1, 28 to the buck, sell 3 to 7. 11 to 15 for sell 2. Gold's off a little bit overnight. Not a lot Going on range-wise, the London low came at 35, so 35, 37 by 1, 30 to 32 by 2. Last night we had a sell at 44.46. We did not get there. Overnight session high is 43, so we were just under that. So we'll make 43.45 sell 1, 49.51 sell 2, and a play for stops above 12.50. I think we're headed to 12.50, but it may not happen today. Tomorrow, rate announcement by the ECB and Bank of Japan is probably the catalyst that gets us there on this move or not. The euro is off a bit overnight. Overnight session was 94.16. We're through 75. We had our second buy zone at 50 to 60, so we'll make it 50, 55 by 1, 20 to 30 by 2, 75 sell 1, 90 to the buck sell 2. Just a structural play, seeing a trading range. Crude oil. We expect a 30 to 40 tick day session range until we hit the news and things go crazy. And we love it when the news hits because it gives us volatility. And with that volatility, we've got a chance to make some money as a day trader. People really don't appreciate the fact of how dependent day trading is on volatility. And when your markets go dead, and all markets go dead periodically, then you have to be able to move into other contracts that give you a chance of making your day trade plan. Okay, crude oil 47 looks like resistance, so we'll make 47 and a quarter sell 1. Tomorrow is contract expiration. That does favor higher prices. They're buying August, selling September. The hedge is being rolled into September. On the buy side, 46 and a quarter, 46.25 before the inventory report hits, and then 45.75, 45 even by 2. So we're probably going to sellers at 47, probably buyers against 50. We'll probably trade in between that until the news hits. And my guess is, even though the draw is forecast at minus 3.6 million barrels, the market will be playing for a smaller draw in crude and looking for a draw of 5 million barrels plus in gasoline. The E-mini. Last Friday we didn't have a lot of news and the market made new contract highs. Can we do that today? Equity markets around the globe are higher. If we put all of this together, looking at a pretty strong P, you can see that volume is above yesterday's volume, is above the volume 2 days ago. So everything is set for the market to retest resistance at 61, 62. Now whether it comes out or not remains to be seen. Right now, looking at the profile, we've got more volume in the bottom half than we do in the top half. So we're looking at a B volume-wise right here. You're looking at a P with the point of control as high as it is. On TPOs, volume usually wins. So we have an attractor down here at 55.50. And we have our last rotate down yesterday at 52. So 50.52 is buy 2. 55.57 is buy 1. They make us pay up to get long early in the session. Sell failure to take out and hold 60.62. And then 64.66 sell 2. Starts plus 1.17. Permits plus 1.20. Crude minus 3.6 million barrels. The focus is starts. Okay, next thing will come up will be Pat's stats, somewhere around 7:22 Central, 8:22 Eastern. Be back for that in a bit.